following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
As we start the show, S&P 500's off 9 points. Dow's off 35, NASDAQ's off 83, and the Russell's off 10, 11, somewhere in there. So as we look at today, a little bit of continuation. Volume did decrease on Friday, even though we went down. Volume so far today, 4 billion shares as we start the show. Still good and strong, but not overwhelming. Probably going to be enough of volume that you'd love to see today's low retested. I would not be surprised to see a little bit of a bounce into Tuesday, and then maybe Wednesday, look for the bears to go and try one more push down. If they can't get that done on maybe Wednesday, you may have a buyable bottom out here. I don't see a lot of signals that say get froggy with it right now. But it could be close. Now, if it fails on Wednesday, then the next level down. But volume has started to decrease. See a lot of stocks that are starting to firm up today. Today is, of course, vacation for some folk. But for me, just looking at it, we've got a lot of earnings starting to come in the next week or so. We'll go through a few of those. But I think it's time to hurry up and wait. I have a lot of stocks that we made money on before and got just too high. They're all coming back down to some of these levels where they seem rather cheap. Now, the question is, will I think in a week from now that they were fairly cheap? And the answer is going to be that probably the next retest of today's lows. Just not enough juice to really blow out those lows today. As I said, Friday, volume could have been a lot heavier with the destruction that came in. On Fridays, a lot of times you have washouts. You didn't get that washout kind of volume. I was thinking maybe 10 or 11 billion shares, and it came in with about 7 billion shares totally in all the markets. So we can see kind of a model that says, you know, that 2850, 2860 range could be a significant low in the markets, and maybe we kind of tread water. Maybe we find a trading range and do some consolidation after the elections, the first week in November. Maybe the markets at that point are ready to take off like a rocket. Maybe they actually just kind of go back up to those highs at the election. So we got several scenarios that we can look at. I don't see anything where the bottom just drops out. But that's why stops are there. You can always be wrong. Give me a call today at 877-927-6648. Email me at path@tfnn.com. Someone's already done that, and we'll answer those questions. And, of course, you can always put a message in the den. Let's get to a little bit of history, and then let's answer a fairly decent question that I researched today, and we'll give the answers to it.
And it's all just a little bit of history repeating.
On this day in 1919, the U.S. Senate and House of Representatives passed the Volstead Prohibition Enforcement Bill, carry out the intent of the 18th Amendment. That means no more drinky for you. And, of course, what did it take? Another 12 years before it was repealed. Everybody wanted to drink, but pretty much the end of the Civil War brought a lot of gentlemen home, and those gentlemen had seen some of the worst things that a human can see. They were very, very much in a drinking mood, and bars tended to flourish with those guys. A lot of them getting a little bit of money every month from the government as veterans. Well, all you have to do is watch what's his name, Burns's documentary on Prohibition to really get a sense of how horrible it was. I see, stories every day about the thousands and tens of thousands of heroin addicts on the streets of New York and in Seattle. In fact, I was in Seattle, and I thought there were enough needles under the Space Needle to actually make yet another Space Needle. Horrifically bad to allow people to sink in such depravitude. But that was very much the heroin of its day. And it was not uncommon for the man of the house to drink and gamble away all his money the day after he got it. And the kids and the wife sat at home starving because they didn't have any food. It was so poor, I can't even say it, plurific, that's why this thing came on. It wasn't like there was just a little problem. It was a monstrous problem. But eventually everybody has to figure out a way to clean it up. And whether it's 70,000 homeless people in downtown LA or the murder rate in Chicago, it's kind of easy for politicians to look the other way and act like it's not happening. Eventually, though, a lot of people get together and say that enough is enough. That's basically what happened here. They got tired of it. And actually, it did a great deal of good because it made it very hard for the people to throw their cash away almost instantly at the bar and the gambling casinos. Made it much tougher, and of course, got a different clientele to go sneak into the speakeasies at night. But probably in the scheme of things, probably actually did a lot of good for the country, and probably getting rid of it did a lot of good for the country yet too. Anyway, on this day in 1919. Got a question. I have enough time. People behind Mossack Fonseca, that was the hack in and Facebook hack. Are they all the same people? I don't think so. A lot of different people. I did have to laugh. I don't know if anybody saw it, but I think it was Sweden. Found a bunch of Russians in a minivan trying to hack one of the institutions that tracks chemical warfare. And all of them were in there with all their laptops. They had diplomatic immunity, but they grabbed all the stuff that they had and sent them home. But good article to read on that one. I think it happened on Thursday or Friday last week. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And a lot of discussion, I guess, on the financial infotainment basic cable channels. And Larry from Minnesota asks, would you please review the SEC regulations on company stock buybacks during a blackout period prior to earnings? This seems to come up a great deal, and it's just pure propaganda. We will go through what the truth is here. First of all, there is no federally mandated blackout or quiet period. It is more kind of a suggestion than a rule.
The code is more what you call guidelines than actual rules.
Yeah, thank you, Captain of Black Pearl. The SEC establishes rules which companies can buy back stock. Those are fairly vague. I don't know of anybody that's ever been actually charged with it. As long as they, any company or executives can buy back shares during a blackout period, as long as one thing is there, and that is that they had a plan to do it already. So it's not uncommon to see them have a plan and then decide not to execute that plan, but there better be a plan. It's kind of like Musk. He should have at least had one person that he could rely on that said that he was going to give him the money. And then that would be it. You got this plan. Are they really going to do anything about it? No. But for all practical purposes, there's a lot of these plans that are out there, and people can do it at any time. The whole idea that they can't buy back down during this period is not lined up with the facts. The SEC has occasionally had inquiries. I've never seen one in the last 20 years where they actually went after these people for buying shares back. Now, selling, whole different story. Much more problematic rules for the SEC of selling into it. Not only that, but if you are selling into it, you can expect a lot of lawsuits from the shareholders, which are not really shareholders. They're just lawyers chasing the proverbial SEC, what do you call that? Ambulance. That's what you would say. So anyway, thanks for the question, Larry. But yeah, I wouldn't worry about that. I would worry about selling though. And if you see somebody selling during the quiet period, most of the companies themselves have fairly significant bylaws in there that means that the company executives, if they did it, would be out on the street, have to be fired. And why not all do it? All decent companies seem to have done it. Okay, that gets that started. Let's go back and look at what's going on in the market. We're off only 5 points. I was kind of thinking that we would rally a bit today. And again, what I want to see is some kind of pullback over the next couple of days. The first thing we always want to be looking at right now is the TLT and the dollar. The TLT has not really rallied that much off the lows, maybe what, 15 cents higher, 112.93 as we speak. Well, yeah, you had a fairly decent Gartley pattern setting up for the TLT. Didn't quite get up to the highs, but certainly had much stronger B to C going back to this May 17th, if you want to look at the C point, but it was one of the more, it wasn't a textbook. More important was the highs at 122 on July 6th, where you had 21.6 million shares, retesting it with just 8.5 million shares on August 24th. And from then on, it's kind of moved on down. I kept on thinking we were just going to have some kind of big gap down, and instead it's been a lot more small gap downs. Now today, extremely light volume in the TLT. Again, maybe that's part of Columbus Day, 2.44 billion shares so far, but that's compared to the 18 million shares. Now, maybe that data isn't right. I'll get to check it after the show, but it's been kind of reported light all day. Other things going on, a lot of risk off. If you need cash, or if you're not generating an income now, let's say like biotechs that don't have a lot of cash coming in, other technological companies that have great promise, but little revenues are continuing to get hit. One of the other things I wanted to look at was the yen. This is one of the leverage ETFs for China. This thing had a huge rip higher and a huge rip right back down, actually to the lows today with some decent volume, but it certainly looks like there is some kind of channel developing in these China 3X bulls, the yin and the yang. Let's see if there's anything else out here. Another thing I was looking at are some of these other stocks that seem to continue to be tarred at least with the same brush that many of the other big social media stocks are. Yelp actually coming back into this sign of strength from August 9th, was up here on 26 plus million shares. Today, if this is right, it's down on 760,000 shares. So again, fairly light volume day in a lot of stocks. A lot of the volume is in the indexes, not in the individual stocks. So we can continue to kind of keep an eye on this. Anyway, hope we retest today's lows, or maybe even a little lower, and then close back above it. Hopefully on Wednesday. Could be a little later out here this week. You can give me a call at 877-927-6648 or send me an email to what do I have? Scans. Did I have something? I don't think I did I? I didn't do that. I'm going to have to go back do this. Oop. Somebody there?
Hello?
Hello, go right ahead.
Hi, David. How are you?
Great.
David, can you take a look at the IWM? Has that hit its low? I feel as though, looking at charts, it's made its low. Probably the S&P also today. Do you see anything bottoming here, right in here? Because
Yeah, I
Tuesdays
see.
are turnaround Tuesdays anyways. Hopefully that'll work. But I think the lows could be in here today. I was just wondering if.
I don't think so. June 28th, 161.66 with 27 million shares. You went through that with 31 million shares on Friday, and energy was stronger on the way down. So could this be a low? Maybe. I'd love for this thing to bounce and then retest 160.55. Even if it doesn't, you came down on with more energy and you broke the lows with more energy. So I would look for consolidation first. We'll be back.
I'll hang in there?
Okay. We'll be back in a minute.
Okay.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And hopefully we're still on with Dave from
I am here.
Camp. Okay. Came down with more energy off this high at 173.39. Right? We broke the previous low of 161.66 from June 28th on more volume.
Right.
And does that mean that this is going to hell in a handbasket? Not necessarily, but it will mean that for probably a little while, individual stocks will, there'll be a handful of them that'll start going higher before the index does. And that may mean that the IWM doesn't do much for a handful of days too. So
Yeah.
you've got something here that is slightly bearish, but not horribly bearish. And you'd want probably at least a little bounce tomorrow and then a retest of that low and then some consolidation. My guess is that the better bet would be find something in that IWM for an individual stock that came down with light volume if you want something right now.
Yeah, it's just that it's been holding since February, the 200-day moving average, David.
Yeah, but that
I mean,
doesn't
if I'm a
really mean.
betting man, I'm saying, geez, it held the February low and the April low, and now we're near
Yeah,
the.
except I don't believe in moving averages. So,
Yeah.
if you use them, that's fine. I can't use them. I've done a lot of tests on them. For me, they're statistically meaningless, especially
Yeah.
the 200-day. So,
Yeah.
what I look at out here is, what are people doing today? And the answer is, well, at least on Friday, they had more volume than the last test of that June 28th low. So that
Yeah.
tells me that could you bounce? Yes. Will it be probably a short bounce? The answer is yes. Then you come back and there's no volume. That is where the real risk reward is here. Makes me think it's a little bit more betting than prudent speculation, right? So that would be it now. That being said, there are a lot of stocks out here that look really sweet. Had a bunch of them in the newsletter this morning.
Okay.
They may have individual stocks, may have some of them may have really bottomed. They may even start pulling back tomorrow, but you may have a nice little bounce in those, and they may start going up before the rest of the market, like the S&P and the IWM and the rest. But there's a lot of losers in the IWM and a lot of losers in the S&P that can hold it down much longer than some of the individual stocks that look like they're ready to start up.
Yeah. David, can you take one more here?
Sure.
Yeah, X, U.S. Steel.
We're bigger than U.S. Steel, Michael.
Yeah.
You gotta be a fan. Gotta be a fan of Godfather. Okay. So what are you looking at out here?
U.S. Steel, daily chat.
Yeah. What do you think?
Has it been, is it close to the low? I see lows here at 28.41 and 27.89. And
27.89 is what I'm looking at. But what I really see out here is this thing doing nothing but go sideways since mid-August, right? You haven't broken out. You haven't broken down. You haven't done anything on the sideways action. And to me, when they do this, it's kind of more of a coin flip. I want to see it break the lows on lighter volume or break the highs on lighter volume to get a signal. Right now, you don't have anything other than, I think, a coin flip.
We don't have a inverted head and shoulders bottom here where the August low was 28.41, September 27.89, and 28.94, or 84, should I say.
Hang on just a second.
Could it be?
Nah. I mean, ideally, if I wanted to be very long this thing, I'd want to test a 25.50. I mean, that's the long-term support. Doesn't mean it's going to get back there, but the gap up on October 13, 2017 is the long-term support on this one. Could it just go sideways out here and start moving higher? I think it could, but here's what I see for steel, and that is slightly decreasing automobile sales and manufacturing, and that's never really a bullish thing, right? I mean, that's a huge use of steel here in the United States. Also, none of the real programs in the government to build new bridges or anything really went through. I have no idea where all that money got thrown at, but it certainly wasn't building bridges or buying new cars. And that's, if we saw a few more of those things, I think we will in the future be fine. Just long term, since this thing moves so slowly, I'd be a much bigger fan at about 25. Well, actually, that gap between 25 and 26 to me would be much more interesting.
Okay. Do you have any more time there, or?
Yeah, but go ahead. Yeah.
How about gold?
I actually finally got an answer on my question that always bugged me about gold, and that is that no one would answer that I ever ask about what and why gold went sideways for, 12 or 13 years from the late 80s till 2000. It finally took off. My question is, would it or could it actually do that all over again? And I'm going to say that, at least from what I've got on that, let's see, where is it at here? Okay, I've written down these three things. Okay. In the 90s, it had increased production from open pit mining. The other thing I came with was lack of central bank buying and some selling from the central banks all the way through the 90s, and weak investment demand. So I can't say that we've got more pit mining, but I can say probably central bank doesn't seem to be doing a lot. Probably the last one is still in effect, and that just isn't a lot of investment buying. A lot of that money's been going into equities because they've been moving much stronger, and the dollar's kind of been strengthening for a while. So the question is, do I think this thing's in another 10-year sideways cycle? Don't think so. It doesn't seem like, at least from what I could find in my research, that, I was afraid that thing would do nothing forever. And we were back in the 90s again. Don't see that, but I could see that we could go sideways for a little while longer.
Okay.
I don't see any difference. Here's the problem I have with everybody saying $5 higher or lower is some kind of signal in gold. And that is, if this was a stock and not gold, and it went from $11.90 to $12.10, no one would say a word about it. They just accept that that was some kind of noise in the trading. And as far as I can tell, all I'm seeing is noise in gold. I don't see any real signal yet. And the signal would be something bigger. One of the great points that changed the way I thought about trading was Fooled by Randomness by Nassim Taleb. He brought up a great point back in when he wrote the book, which was about 2003. And that was that the change in the Dow, if it was a 100-point move or a 500-point move, a 500-point move is 5 times more than 100. It's actually like 9.6 times a bigger signal. So you got to look at that. These tiny signals.
Okay, thank you, David.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-5400. 877-518-9190. That's 877-518-9190.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
S&P's off 2, Dow's up 8, and the Nasdaq's off 55. Do we have a caller waiting?
Yeah, it's Victor.
Hi, Victor.
Hello? Yeah, I see that. I'm checking the prices. We're back to like September expirations, like on Intel and STM. Tell me what you think of STM. I can't really say the name of it. It's a European country. They're supposedly in everything with 5G. STM is the symbol. And is Intel a buy? We seem like we're bottoming out at this 4660.
ST Microelectronics.
They're into 5G.
And June 8th. These guys didn't do a whole lot. Ericsson got the big contract over in Europe. So I wouldn't think that this is a big 5G play. And I'm trying to remember who gave them. They got like 2 or 3 contracts for like $3 billion to put up all the 5G stuff.
Oh, and they didn't get it? Because I heard they're like in every phone and every chip, this STM, this 5G.
Yeah, but they're in low margin stuff.
Okay.
They aren't, like Intel makes 60, 70% margin on their chips on average. This, I don't know what it is. I'd go look at it, but my guess is it's 20% margins or something. So not huge margins. I don't think that they made a great deal out of it when Ericsson got that giant contract for $3.5 billion. You would have seen it in the chart here over the last month, at least for Europe, and you don't see it, right? If they would have been making, they would have gotten a big hunk of that. You would have seen it in the chart. So don't think that right now. I haven't read anything that says that these guys are going to be the big winners in 5G. But what can you say? So,
what about Intel? Because I think I like that stock. I hear pros and cons about it. I think it'll be around another 50 years. Not like this AMD is like way overpriced, I think.
Yeah, it's pretty tough. Intel had its big dog and pony this morning. It released and showed its new. Well, it didn't release. Guess we've got about 12 days before the new chips are being released. They have a new product called an i9 with, I think, like 18 cores, kind of built on a lot of the older technology. Intel's just come back and filled this gap up from the second. You had pretty good volume there, 40.6 million shares. Friday you had 28 million shares. Today about 11.8. So you're kind of in the support area for Intel.
What about when they get a new CEO? You think they'll get a pop? When are they ever going to announce one?
Don't know. The biggest problem with this company is that no one wants it because they think that the board of directors who got rid of the last guy are a bunch of jerks, and so no one wants to go into that buzzsaw of a bunch of people going, okay, so you dated this girl 10 years ago. No one said anything about it at the time. No one ever brought up a problem, and then all of a sudden you wanted to do something slightly different than the CEO, and you ran him out on it. kind of blackmailed with it. And everybody, I mean, that got around really quick around Silicon Valley, and they think that a lot of the board members are just jerks. Now, one of the other things is a temporary CEO looks like he's doing everything to throw a monkey wrench, so he gets the job. So there's political infighting both at the current with the current interim CEO and the board members, and everybody else kind of looking at this company as dysfunctional in the board members. So there's a little bit of that. Everything seems to be moving along, but I don't know. I think it was, if they had it all to do over again, I think that they probably would have let, I think his name was Cranston.
Yeah, but I see them in every computer. Like I got all the Dell computers there. I don't see any AMD anywhere. I don't never, you know what I mean? AMD was like, everybody's saying AMD is the next greatest chip, like NVIDIA.
The reason why that everybody's been doing that this summer is Intel waited for a few things to get fixed. And so AMD had their chip out a little sooner at the beginning of the summer. And their current version of their chips, so everybody was buying that and hailing them. What Intel did was hold up their chip for another 3 months so they could fix all those issues that they had at the beginning of the year that people kept yakking about that have never become a problem. The new chips that they announced today do fix the meltdown and Spectre issues, plus some other stuff that they're fixing with software.
Well, I heard they have a problem with delivering this new chip that's a lot thinner or something. They built a big factory in Arizona. I don't know if it's up and running or not. And I heard everybody complaining about that.
I talked about this a couple of weeks ago. You can make smaller chips, but the question is, how many do you get out the other end of it? It takes about 2 months from when they start a chip on one side of the plant till it comes out the other. So what happens when you only get 90% of what you start out the door, or 50% out the door, or 40% out the door? Well, the answer is that a lot of companies, even not Intel, especially the ones dealing with Taiwan Semiconductor, are actually going back to the higher die size because they just can't get, I mean, they've got so many ones that end up bad after that period, it costs them an arm and a leg. So Intel figured out a couple of years ago that until they could get the yield up to where it was for current products, they weren't going to do it, and they still haven't done it. And they continue to make, the same kind of 60, 70% average margins, and that is problematic. Now, AMD had Taiwan Semiconductor to do their chips, and they did them smaller. What we don't know is how many of those chips are bad, because it's not just Taiwan Semiconductor that's going to eat it a little bit. It'll be those contracts don't say, that basically say that you pay for whatever we do here because we're building them for you. But they've got, both of those companies have skin in the game for these products that they build, and they call it yield. How many, what do you put in, what comes out the other end, and the yield is pretty poor on these small diameter or small, what they call die sizes, DIE. It's like 10 nanometers on AMD, and they yell and scream about it, but man, we just don't know how bad they're going to eat it on yield. So they may actually have a lower margin than, or significantly lower margin than Intel does at the moment.
You buying this market right now, or are you sitting back watching? Like, the market's positive already. I guess Trump put his men to work today. They came back. They're doing some overtime in the government.
No, I think a lot of what happened this morning was about China. The Chinese government started throwing rocks at Pompeo, and everybody was a little bit afraid of that. And I think that's when this thing went lower. I'm still hoping that we get the bounce here, maybe for half a day, a pullback, and on lighter volume in the next couple of days to set up some really viable lows.
Weird Wally Wednesday, no? Don't you think it'll happen by Wednesday?
Yep, I'm thinking that we go into fun, or not fun time. We go into optimistic, and that we'll be back after this.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we're wrapping up the day, and it certainly looks like the Mr. Market is trying to go positive. 2883 on the S&P cash. Dow's up 30 now, 31. Nasdaq still off 50, and that seems to be rather weak. My guess is if we had lows in, that some of the stocks that I'm looking at today would have seen a lot of people piling in fairly quickly, and I don't see that. Micron is one that I would have expected if everybody thought that the bottom was in, that they'd pile back into. The last low was at $40.68, a September 12th low. I would love to see, we're not quite into that candle. I would like to at least be into that candle. I do like the incredibly light volume, but again, some people may be off. The next 2 days, I think, is much more important. I do think that there are a lot of bears, and they are not going to give up easily. They're going to push this market down one more time. At least that's what I'm hoping. And if the volume is not strong enough at that point, I think that will be the time to buy. Anyway, Micron, I would have liked to seen a lot of people firing back in here on this light volume. You just kind of pushed down into those two candles, and that was it. Again, Intel or the SMHs, I mean, we've had a kind of a small reversal out here. But again, to me, I would much rather see us get into like the SMHs. these candles from April 25th at 95.47 on April 25th. That was the low in there. We're not too far from getting into those, at least getting into those candles. Today, though, 7 million shares in the SMHs. That had 9 million shares on April 25th. So we're probably going to come up about 9 million shares. I would have liked to seen it. Now, so far, we've had a nice retracement off this 112 high. It's been on a little lighter volume, a nice consolidation. If we can get into there and volume remains light, it would be interesting. As I'm saying, I'm looking for a couple more days to maybe set a bottom. In the meantime, sell when you can, not when you have to. See you here tomorrow. Same back channel.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.